Hello, Simon Dixon here, CEO and co-founder of BnkToTheFuture.com, and welcome to 2016, the year in review. First thing is we're going to go through some of the platform growth updates. BnkToTheFuture.com, our online investment platform for those that want to invest in the future of finance and technology. And we'll be giving the latest statistics and what a great year it was for us. The second part, I'm going to be giving you updates on some of our portfolio companies that are new to the portfolio from previous years or through new in 2016. And then finally, we're going to do some 2017 forecasts for both Bank to the Future, FinTech in general, and the future of finance and money. So let's go straight into the first part and go through some of the statistics for the Bank to the Future online investment platform. One of the major things that we grew this year was the number of professional investors, qualifying investors that are looking to invest in the future of finance and technology. We've now got the largest community of FinTech investors all investing online in the future of finance. In fact, we've got 32,500 registered professional investors all looking for FinTech deals to invest in. Of those 32,500 registered professional investors, this year saw us pass the $122 million invested in the rounds that were listed on our platform. The goal for 2016 was for us to pass the $100 million mark, and we're delighted to say that we beat that by a factor of another 22 million. In terms of growth, what does that actually mean? Well, since we first launched as a niche financial innovation and technology platform for investing in the future of finance, we've had a 6,100% growth rate. This year it was 190% growth on our previous year, which superseded all our expectations. We returned approximately $1.6 million to investors through some of our dividend-paying pitches that were paying micro dividends to investors that were investing in the deals while we're waiting for some of the longer-term assets to mature and the sector to grow further. We also had about 18,600 Bitcoins invested, but that translates approximately at today's price to $17 million invested through the platform. So those investing in traditional currencies versus those investing with Bitcoin, we saw 14% of all of the amount invested through our platform actually was invested with Bitcoin or other cryptocurrencies. We launched this year the ability to invest with alternative coins, and to be honest, it hasn't made too much of a difference because almost all of the cryptocurrency volume is being done in Bitcoin, showing and proving that even though this year we saw other blockchains launched, turns out that people are only really using their Bitcoins because most of them are only using their alternative coins in order to buy Bitcoins. We had over 22,000 transactions and investments made through the platform. We started a tour of fund managers all around the world, and we were very fortunate to be put in front of pretty much most of the institutions that are managing most of the money in the world and speak one-to-one with fund managers who are looking for IPOs to invest in, or they're looking at how they can invest in Bitcoin and the cryptocurrency sector, and looking to put some of that institutional money in. It's still very early, but I had the opportunity to sit down one-to-one with over 100 different fund managers, and the tour took us to Tokyo, Singapore, Hong Kong, London, Boston, San Francisco, and New York. So I can tell you from first-hand experience that the institutional money is very excited about seeing where this sector grows. They feel it's a little bit too early, but we're prepping some of the conversations for when the sector is ready to grow to the point where some of the IPOs come through, or some of the exits, or some of the mergers and acquisitions, now that the entire financial sector has got interested in this. In terms of presentations, we got to explore and meet some of the professional investors and also some of the companies that are building financial innovation in Vietnam, South Korea, Hong Kong, Japan, China, Thailand, United States, Dubai, Singapore, UK, Malaysia, Iceland, and the list goes on. We're also in 2017 looking at expanding some of the other geographical areas where FinTech can have some impact. We've already got bookings in 2017 to be speaking in Australia. We really want to spend some time in India, and we'll go through why in the year in review. South Africa is an area that we haven't explored yet that we think has massive potential for financial innovation, as well as some of the areas in South America as some of their currencies are becoming more and more destabilized, and some of the African regions that we've been investing in companies in as well. So those are the main statistics that we're going to go through in terms of a platform update. And moving on to the second part is the portfolio update. So I'm just going to reel off a list of some of the companies that are new to the BnkToTheFuture portfolio. We were delighted to add BitPay, who's doing merchant processing. Some of the larger exchanges like Kraken, Bitstamp, Bitfinex. Live on the platform, just meet their minimum funding call, is TallySticks, who's doing invoice financing. Delighted to add Mega Upload 2 and Bitcash, which is Kim.com's new venture. Storage, who's doing some file storage using blockchains. MadeSafe, looking at more decentralized internet concepts. Bitso, which is doing remittances and payments in Mexico. UnoCoin India. Zcash, which is bringing a more privacy-centric version of Bitcoin. Exodus, which is a new wallet that makes it easier for some of the institutions that we were speaking to be able to store their own assets and build a portfolio. Bitwage, Loyal, BitSpark, Coin Payments, BSave, Brave New Coin, Tokenly, Credible Friends, Credit, Scenario, and Airbits. We're also excited to announce that we did follow-on funding rounds after securing a venture capital and institutional investor from Shapeshift, BitPayzer, and Factom. With all of those companies, the types of companies that we're always looking for at BnkToTheFuture is ones that are having real impact and looking to make real impact around the world in terms of financial innovation. The first thing I want to go through is the story in India and one of our portfolio companies, UnoCoin. So UnoCoin, we were really excited about investing in and bringing to our investors on the platform. Now, why India hit the spotlight and actually created a bit of what we believe to contribute to a Bitcoin boom was because of their demonetization process that they launched in an extremely controversial and in very unethical way. And that was that the government in India, overnight, with very little preparation, decided that it was time to take the 1,000 rupee note and 500 rupee note out of circulation and give all of the Indian nation to the 30th of December in order to exchange those notes. Now, when an economy relies 80% on cash, they're storing most of their wealth in gold and cash. The larger denominated notes are very important. Now, the reason and the justification that India's given for this is in order to flush through some of the cash that criminals might be holding, but at the expense of all of the legitimate people that are holding those amounts of money and storing those cash. They also wanted to flush all that cash through the banking system. Indians all around the country had to go around with, big chunks of cash that they had in their life savings, risking their lives while they stood outside banks where they were only allowed to exchange in 4,500 rupees per day, meaning that they had to go back to the queue day in, day out and try and exchange it. The central bank didn't actually provide enough currency in the lower denominated notes in order to execute this, and some of the banks were closed for a couple of days where some of the people that were willing to pay bribes were able to get their notes and exchange those. So it was a massive confiscation on the wealth of India. And every time that we see things like this, people start to realize the principles that we've always preached. If you hold your money at a bank, firstly, the money is legally not yours, and so you're subjecting yourself to the pressure of bail-ins. Secondly, banks spend it as they wish. And thirdly, it's subject to an inflationary monetary policy, whereby the money base is always going to increase over time, and therefore your purchasing power decreases and you can buy less goods with your money over time. The exact opposite of Bitcoin and what Bitcoin came to be. And so Uno Coin is one of the largest exchanges in India that allows the Indian population to buy bitcoins using their rupees. And they saw a ginormous spike in volume. This demonetization fiasco was actually rolled out. So we were really happy to be able to provide the ability for the Indian population to take many of the properties of cash that the government is waging war on, and actually hold some of that in an alternative asset like Bitcoin, which has become a real global store of value that is neutral from many of the political nationalist currencies, which are implementing nationalist-based policies at the expense very often of their own population. So remember, with Bitcoin, you own it, you can spend it as you wish, and it has a monetary policy that's deflationary, i.e. the price is designed to go up over time so that you can buy more and more goods, and it encourages savings. We successfully saw the recovery, and it's not the end of the story yet, but so far it seems like the successful recovery of one of the largest exchanges in the sector. So for those of you that have been in the sector, in the Bitcoin blockchain sector for a while, you'll know that Mt. Gox was the exchange that lost $450 million of its depositors' Bitcoins, and all of the investors still to this day have not received or seen any kind of compensation from that fiasco. The lawyers, the accountants, the auditors have been paid a lot, but we had another unfortunate situation, which was with Bitfinex. So Bitfinex was hacked to the tune of $72 million worth of depositors' Bitcoins. Immediately, this created a crash in the price, but this time there was a lot more liquidity, so the Bitcoin ecosystem was able to endure it a lot more. But what made history, and the history is still being written as we speak, was the way that Bitfinex actually decided to implement their recovery plan in order to try and get back to trading and not have a Mt. Gox scenario where the whole ecosystem and a massive amount of Bitcoins are actually lost. So Bitfinex issued their own digital token that represented the amount of money that they wanted to owe and repay their customers. And what they did is they decided to actually haircut all of the accounts. Rather than saying you've lost your Bitcoins, they decided to take a 36% haircut on all of the depositors. So the maximum that you could lose at this point was 36%. And within 1 week, they were back and open and allowing people to withdraw and allowing people to trade again. Now this token then traded on the market, and those that were less positive about whether Bitfinex could actually recover were able to sell their tokens at market value. So those who wanted to sell and were not confident of the recovery of Bitfinex were able to sell them at 30 cents on the dollar. As people gained more and more confidence in Bitfinex's ability to recover, the price started to rally to about 60 cents on the dollar. And Bitfinex actually started to repay and eliminate some of these tokens. Those that were willing to actually hold their debt were receiving it, and people started speculating on the tokens, and it created almost like a prediction market for Bitfinex's ability to recover. Now at BnkToTheFuture, at this point, we weren't involved in the issuance of the token, but our legal counsel spoke with Bitfinex's legal counsel, and we put together a BFX token to equity pitch, whereby those who own those tokens, rather than having to take the lower value that it was trading at in the market, were able to exchange those tokens for $1 worth of Bitfinex equity. Approximately $34 million worth of these tokens have been converted into equity, and another $4 million or so has actually been redeemed, reducing the liability right down to approximately $42 million or so. And Bitfinex's volume has been going up and increasing. It created almost like a disruptive model towards the liquidation process. So rather than all the accountants, the lawyers, and none of the investors receiving their money like we saw with Mt. Gox, the worst case scenario is somebody received, approximately, after selling their tokens, about 20% haircut on their loss, which was the largest loss that some of the investors endured. Others speculated on this, and it was one of their better trades. And Bitfinex is back to trading, and we didn't see the ginormous systemic risk that the Mt. Gox scenario actually created. One of the stories, as we saw Donald Trump get elected, was his real stance on clamping down on the people from Mexico have come over to work, and they've sent some of their US dollars back home to their family. Well, Bitso is one of the largest exchanges for Mexican pesos to US dollars via Bitcoin. And are starting to build remittance products out there where people can use Bitcoin. But what was really interesting is they came one of the first examples of what happens, and this will come through in terms of its relevance when I do the 2017 forecast, that actually managed to get an integration into the Mexican central bank that allowed them to clear direct from Bitcoin, Mexican pesos, US dollars to the central bank of Mexico. And through this integration, they can bypass the banking system, whereby they can issue the equivalent of bank accounts via Bitcoin with a direct integration and perform all sorts of instant clearing settlement processes. And immediately that started to have an impact when Donald Trump starts to clamp down, saying, we're clamping down on Mexican pesos and US dollar market, and now you can use Bitcoin as the rails in order to own your own asset and make some of those remittance plays. And we're really excited to seeing where these things can go. The final story I want to go through is we started to this year expand out of our just financial innovation niche and do some more deals around encryption and privacy. And so we were really happy to work with some of the most exciting projects in this, whether it be storage that allow people to completely own the private keys that allows them to decrypt their files and do that in a non-geeky way and compete with some of the services like Amazon S3, where you don't have to store all of your data in Amazon servers. And then some more, very ambitious projects like MadeSafe, which are building an internet that doesn't actually rely upon IP addresses and servers. And also Kim.com's Mega Upload 2. You can see some of our videos where Kim.com shares his stories, his integration with how file storage can be integrated with Bitcoin as well. So we're really excited to see where some of these projects actually go throughout 2017. And those are 4 of the stories, and every company that we've invested in has a similar kind of story in terms of the real world impact that they're having and that we're looking to drive forward throughout 2017. So it's really interesting to see where some of our investors' money is going and how these companies are looking to build some new value so that they can get towards these exits that we were looking at with some of the institutional investors throughout 2016. And so the final part of this video, section 3, I'd like to do some forecasts beyond 2016. The first, I'd like to do some 2017 forecasts for Bank to the Future and our platform and some of the things that we're actually going to be focusing on and looking to roll out. And then in general, more FinTech, money and the future of finance, so that we can end with a thought of what we've actually got ahead, so that investors can start to plan whether they want to be diversified into this sector and some of the impacts that we're looking to have as we launch more deals on the platform and grow further. So in 2017 for us, it's all about providing better tools for investors. We've been listening to our investors and we believe the platform needs to really grow and introduce new features that allow you to get a real grip of how well your investments are performing, the value of your investments, and some more tools to do that. We're going to be looking at launching some more loan-based products as well. And what we can roll out as when we did our funding round, we were talking about getting closer towards a secondary market. The challenges with the secondary market is not necessarily the technicals. The technicals is okay. We've got a model that we figured out that can do that compliantly, but trying to make a fair market is the major challenge, and we've been discussing that very aggressively, and we'll be looking to roll that out as we go through. We learned a lot in terms of the things that didn't work so well. And one of the things that we're going to be a lot more careful of is that we had lots of opportunities due to investor demand that were companies that were doing stuff around alternative coins to Bitcoin and some other cryptocurrencies. Almost all of the bad investments centered around people doing stuff with alternative coins, alternative cryptocurrencies. So we want to make sure that when we bring an opportunity that's not Bitcoin related in the cryptocurrency sector, that's focused around alternative coins, we want to be more skeptical. So those are some of the things that we're going to be looking at in 2017. Now over to some of the things for the FinTech sector and the impacts that we think we're going to see grow in 2017 as well. We believe that the government's war on cash is going to continue. We've already seen Europe that want to eliminate the 100 euro bills. We've seen Australia that want to eliminate some of their larger denominated bills. We've seen this in Venezuela and countries where their currencies are in turmoil, looking to have a further war on cash. We believe the need to own your own money has never been more important, as governments are going to be pursuing more nationalist agendas. And those nationalist agendas are not necessarily going to be good for your personal wealth. We're seeing in China the absolute devaluation of their currency. A country like China, who is starting to build excessive levels of government debt, which has traditionally followed a very different model to the West, but is now pushing out more debt-based models. As their debt grows and grows and grows, and they devalue their currency, you've got to look at what the effect of that actually is. Well, really the effect is as follows. They're making their debt that they've incurred in their own currency cheaper. If you look at the other side of that, who's actually investing in the government, who's buying these bonds, who's taking on this debt? Well, it's actually the pensioners. And the pensioners, when the currency gets devalued, essentially is making the debt cheaper for government at the expense of the nation's pension funds. I think you're going to see countries that try and completely eliminate cash. And what tools are they going to develop in order to do that? Well, one of the tools that we saw throughout 2016 is central banks issuing their own digital currencies. Now, it's very important to understand that they're not creating an alternative to Bitcoin. They're not using blockchains. Governments have no reason that they would want to use blockchains. They don't want transparency. They don't want to hand over the income from creating money to miners like we have in Bitcoin, because that's one of their revenue streams as a central bank and one of the functions that they perform. But they are willing to issue their own digital currency. So we've seen with, for example, in Canada, who issued their own digital currency, CAD coin, they gave people the ability to download their own national digital currency wallet and exchange money that was, essentially buy CAD coins at $1 Canadian per Canadian dollar that they have. What this is actually doing is it's actually experimenting with a central bank becoming a retail bank and providing services whereby the central bank can issue digital currency direct when they allow you to buy their own Canadian central bank issued currency using money at your own bank, using a bank transfer or a debit card or credit card. You're essentially extinguishing the money supply that banks created and exchanging it for central bank currency. When you exchange these two, the central bank can be eliminating that cash and replacing it with their own cash. Ever since 2007 crisis, we saw the fact that governments needed to bail out those banks. They don't want to do that again. The bailout is over. But what they might do is they allow the banks to bail in which case they can capitalize themselves using depositors' money. Or the central bank can give the users the option of allowing the bank to go bust, but you exchanging all of your money on deposit at that bank for a digital currency version of that fiat. The other scenario is that they could be launching these digital currencies as part of their war in cash. So what we've seen in India, rather than having to rely upon the retail banks and people queuing in order to exchange their cash, put it in to the banking system, at which point it's all trackable, traceable, and everyone can see and they can automate tax collection, which is probably the end goal, then they can actually do this through their own digital currency and eliminate cash altogether. All of it driving what we're seeing towards the end of this year, which is moving towards the $1,000 Bitcoin as more and more people start to recognize these trends. So I think you're going to see not central banks using blockchains, but central bank issuing their own digital currencies, which is a digital representation of their national currency. The advantage of that is that you're going to see fintech companies that have the ability to actually integrate direct onto the central banking system, like we saw with Bitso, rather than having to go through the banks themselves. Which means that you can have national currencies created by central banks and fintech companies and banks competing. But the difference here is that you can allow banks to have the ability to go bust as well, because you found a new money supply, which is the digital currency created by the bank. The other thing that we saw throughout 2016 is, I don't know if any of you are in the UK, but anyone that had a UK bank account would have received a letter from their bank because the government is now making it so that you can actually, the government can actually take and gain access to all of the data at your bank with no permission, no court case, nothing. They're asking you to sign away, giving them the ability to snoop on all of your finances. But remember, the side effect to all of this is that anyone that works at these institutions is no longer accountable to the court. And if they want to do their friend a favor and they want to find something out, or they want to do something for their own, then there's virtually no accountability here, as we've seen with many of the revelations that Snowden revealed. These are all reasons why we're really passionate about making sure that we are investing in these companies that are able to facilitate some of these options, some of these alternatives that are being built. And we look forward to seeing and giving more and more investors options as this sector more matures and more grows. And we look forward to seeing throughout 2017 and beyond, more and more of the multi-trillion-dollar market that is traditional finance being chipped away at fintech, financial innovation companies. If you look at investments in the Bitcoin blockchain sector, it's been reported that approximately $1.2 billion have been invested in the sector. Well, at BnkToTheFuture, the companies listed on our platform have had $122 million invested into those rounds, which is accounting for approximately 10% of the sector. We're really grateful to all of our investors that are diversifying some of their wealth into growing this sector, and we look forward to seeing that grow. So one final thought that I'd like to leave with is that as the year ends and it looks like Bitcoin is heading into that $1,000 range, I think really what's driving a lot of that growth and what's driving a lot of growth in the companies that we're dealing with is that Bitcoin has essentially become a non-nationalist currency, the only non-nationalist currency in the world that is not only a currency because it's got a payment system attached to it, not only is it a commodity because it's become a store of wealth and a very good store of wealth for many people, not only is it acting like a stock because it's kind of like an IPO of the financial innovation programmable money sector, but it's also a protocol and a technology that's become like a bank in a box that's allowing fintech companies to build on top of this bank on a box and create more competition to banking. So as 2016 draws to an end, we'd like to thank every single investor that has made an investment through our platform. We'd like to thank the entrepreneurs that are going out there and creating this financial innovation and technology opportunities. And we'd like to thank many of you that throughout 2017 will explore diversifying some of your wealth into the alternatives and start looking at how the alternatives can be a part of your portfolio. For those of you that are watching this now, you've just had your Christmas, and we wish you a happy new year, and we look forward to 2017. Thank you.